Well, shares in the online streaming service Netflix plunged by almost 12% on Wall Street after growth in subscriber numbers plunged. The company blamed price rises and a lack of new content on the platform, but it's also facing more competition, particularly in the United States. Our business editor, Stephen Carroll, is here with more. Morning to you, Stephen. Why did investors take so much fright over this?
When it comes to looking at a company like Netflix, subscriber numbers is the only number that matters. Netflix has seen huge growth. It is the market leader globally in online streaming. They had been expected to add 5 million subscribers in the period from April to June. And if you look at what their evolution of subscriber growth has been over the past couple of years, that seems pretty reasonable. In the previous quarter, they added 9 million new subscribers. But what actually happened was figures were much lower than had been expected. 2.7 million new subscribers overall. And in the United States, as you can see the bars in orange there, Netflix actually lost customers, down 130,000. Now, if you look back over a year, subscriber numbers are up by 20%. Profits are still $270 million in net profits over the quarter, but those figures are much lower than the previous year, and that means that investors look at the trajectory in these kinds of things. The company's shares so far this year had been up by over a third, but down by 12% after these numbers came out in after-hours trading.
So it sounds clearly disappointing. What's behind these figures?
Well, the company says there's not just one reason why they think subscriber growth has slowed down. They did raise prices for all US consumers in January. It's now a basic Netflix subscription is now $13 a month in the US. That's $1 more than its main rival Hulu. Netflix also says that new shows and films going on the platform in the past 3 months weren't perhaps quite as exciting as they had been in the previous quarter. They do expect things to pick up on that front in the second half of this year. They've released the new season of Stranger Things, for example. Orange is the New Black, another very successful Netflix-made show. And this is really where Netflix is putting its money. Analysts say they're investing $15 billion in new content this year, and that's how they're hoping to drive their subscriber growth in the future. There's also a possibility that Netflix is reaching its peak. The company itself says that it views saturation in the US market as being between 60 and 80 million subscribers, and they've just gone over the 60 million mark.
So what's that mean for the competition?
Well, if you think about, Netflix is the biggest player globally. This is really their share to lose. Globally, they've got 151 million subscribers. As I say, in the US, just over 60 million. Their biggest rival in the market is Hulu. Hulu has just under 29 million subscribers. That's growing very quickly, though. And there's plenty of other competition on the way in the market as well. You've got Apple and Amazon already out there, but new streaming services being launched by the likes of NBC Universal, Warner Media, AT&T. More players are getting into this market because they can see how lucrative it is. The likelihood is the future of streaming will mean less of a one-stop shop. You'll have to have several subscriptions to get all of the new shows that are coming out there. We got a bit of a hint of that this year when Friends, it was announced the TV series Friends was going to leave the Netflix platform. It was going to move to Warner Media's new streaming service. And I think that's the sort of thing we're likely to see in this market in the future.